check in with the markets now. Tom Piotrowski joins us live from CommSec. How are we looking to start off the new working week, Tom?
Pete, sellers are going to have the edge this morning. The futures are pointing to a decline of around 0.4%. So we took a bit of a knock on Friday with the local share market down by a little over 0.5%. So there are a couple of important themes that are coming to bear on markets more broadly at the moment. The conflict in the Middle East is having an acute impact. We saw the US dollar move substantially higher at the end of last week. We saw a very significant move higher where oil prices were concerned as well on Friday. They rose very substantially, the better part of 6%. So this is very much seen through the lens of what's going on in the Middle East. And then we also had the US company earnings reporting season kick off on Friday with the big banks, the first cabs off the rank. All of that led the US share market to finish lower. So the S&P 500 was down by 0.5%. Technology stocks bore the brunt of it. They were down by 1.2%. The thing to point out, Pete, is that there's a very clear move into safe havens, such as US government bonds. They were down quite meaningfully at the end of last week. A 10-year government bond actually rallied in terms of its yield. So it fell. The yield fell down by about 9 basis points. That's a big move in bond terms, and a pretty substantial move higher for gold prices as well. So that is the backdrop for the markets as we kick off a new trading week. The things to look out for this week will include a raft of measures describing the path of Chinese economic growth, and then we'll also be hearing from Jerome Powell later on in the week. So there's some of the highlights on the local front.
Okay, Tom Piotrowski, thank you.